welcome back to the Hub Channel. My name is Brandon, and we have an amazing show yet again for you this week. After coming out of last week, I didn't think that we could talk that much about anything, but we do have more stuff to be talking about. It was a huge week last week, and my guy Jeff Beamer, he absolutely crushed his trade. So we're going to be going over that here in just a second. We're going to be going over some headlines in the market as well as what's coming up that we're going to be watching out for and a new trade for you. But let's go ahead. Let's bring Jeff in here. Jeff, you crushed last week's trade. You've been doing so good so many weeks in a row, but last week in particular, you took a trade that was super low risk, and we turned that into one of the biggest profit I think I've ever seen on any of your trades this whole entire year. So why don't you walk us through that trade, what happened, and how that played out?
Well, sure. The previous week we did ASML, which it was a big ticket, big winner, big risk and a big winner. This week, or last week, sorry, we did a smaller risk, another big winner. This was on Aflac. The duck delivered as far as our trade goes, not so much for stockholders, okay? But our trade generated over a 200% return literally in 2 days, all right? So we call that a triple digit flip in my book. So great trade last week, and we are just in the heart of earnings season. There's lots more to come on this, Brandon. A great trade last week.
Yeah, it really was, and you know, we had a couple of big announcements last week. Obviously, you saw Facebook, you saw Amazon's earnings, and you saw everything else. But this trade was a lot safer to pick out. So I'm glad that we were able to turn a profit. The what do you call it? The triple digit flip in like just 2 days. 3-digit flip. So anyway, that was a really good trade. And obviously, if you guys were watching this trade, you guys picked up on that trade last week. Jeff went over it. We got into that trade, and we're good to go. What are you seeing in the market right now? What are the top headlines that you're looking at, and what's influencing your week this week?
Well, man, there's just so much news going on. Let's start with, just this morning we had the major indices slipping a little bit, and yields just surging. I mean, what a reversal for the bond market, which we'll talk about in just a moment. Interesting comments from the Occidental Petroleum CEO, who was really pretty well spoken, obviously being the CEO of a large oil company, but says really by the end of 2025, we're going to see oil supply shortages. And that really kind of stems from a production side of things. So thought that was very interesting. And then comments from the Fed Reserve Chairman, the Minnesota Fed Chairman, that policymakers can take their time cutting interest rates. Now, I seem to be in the minority of saying higher for longer is going to be the outlook. In fact, Goldman Sachs chief economist says he expects up to 5 interest rate cuts this year, and I'm just a lowly hedge fund manager, so I don't know anything. So, but I don't see that. I don't see that at all.
There's no way. And Jeff, there is no way. You and I both know they're not going to do 5 rate cuts this year, given what's going on in the economy.
I mean, they might do a gratuity cut of 25 basis points, maybe over the summer at best. I'm thinking.
Yeah, but even then, we're looking the first. Yeah, just like you said, the first rate cut's going to come maybe in May, and he thinks they're going to do 4 more after May. If that, there's no way. Whatever, get out of here.
So really. That was kind of along the lines of what I've been thinking and just feeling. There's a feel to the market. That's why they call, trading in the investment industry. There's an art and there's a science behind it. And so you got to go with, how you feel about the weight of things, or the, whether you're hawkish or dovish, and, just how aggressive or how conservative you want to be. And you just got to go with it. But the main thing here, the last bullet point for the headlines today, is that earnings are in full swing. We have over 700 companies declaring earnings this week, and they started off this morning right out of the gate with some heavy hitters. We had Caterpillar, we had McDonald's, Estee Lauder, Tyson Chicken all this morning. We can pull up our list here. I'm reading it over, after market close today. We have a couple dozen earnings declarations. Tomorrow, after market close, is really where, both tomorrow, pre-market and post-market. So Lilly, they actually declared today, even though that's on this sheet for tomorrow. Really, after market close tomorrow, we have Enphase, we have Gilead, we had Fortinet, Amgen, Elf Beauty. ELF is always an interesting one. And you can see the names just go on and on. Wednesday, we have Uber and Walt Disney. And Thursday, we have Affirm and Pinterest and AutoZone, or excuse me, AstraZeneca. I always see AZ and think it's AutoZone. I still get that confused to this day. But you can see the list is long, and you can take your time and study this list to find familiar names and maybe watch those stocks as they go through earnings. But Brandon, there's a lot going on this week in the earnings cycle.
Yeah, it's not slowing down anytime soon. I'm interested watching Wednesday. I'm seeing a couple of those on there as well. PayPal, one that I'm kind of watching. I want to see what happens after their failed announcement of AI integrated into the shopping experience. But this will be a good week, Jeff, and I'm excited that you're here with us to help us walk through this. Markets right now, what's the SPY doing? Some of the other markets that you're seeing? I mean, you said that a little bit of a pullback this morning. What's happening right now?
Well, that we're well off our lows. Let's take a look at the charts real quick. I left this little line that I drew last week on the S&P 500 to kind of talk about what I call my kind of a conservative entry and exit to entering a market. And that deals with the setup, the signal, and the trigger. Okay. And so here we had the market rallying last week, and I talked about this. You either use a moving average or maybe a trend line, and you wait for the market to close above that. So, we have the setup going into last week. That's the market rising. And then the signal was this red candle here that occurred Wednesday. That was pretty ominous. But that's not our entry into going short or reversing the market. What we need is confirmation. And any confirmation would be a lower close. And that's called the trigger. This is a conservative way. Yes, you might miss a little bit of the move. Sometimes we have to anticipate the move. Here, we're waiting for the market to tell us the move, and it did not tell us the move. I mean, we are rallying back up. Let me throw the Heiken Ashi on, and you can see that we had just two red candles, nothing confirmed, because the low, if I zoom in here, the low of the second red candle here was nowhere near a lower low. Yeah, we traded maybe below there, but no confirming move to go short the S&P 500 last week. And if I throw a 10-period moving average on here, you can see that we're running right up that 10-period moving average. I mean, why a 10-period? Well, this is a fast changing moving average. It's very short term. And we have been just riding up this, and it is just kind of keeping us long the market right now. So as far as the S&P 500 goes, today, as I mentioned, we're well off the lows. We're only down 22 basis points today. Brandon, I don't, what do you think here? Quite the move.
That line in the sand that you put on a couple of, a little bit ago, I was watching that as well. And I remember when you put that on, I would have been one of those guys seeing that red candle. I would have thought that we would have trended a little bit lower to meet that last, right, almost where you put that line. And we didn't get that. And that's the market, kind of doing a 180 on you. So it's good that we were watching that a little bit, and we were a little bit more cautious on that move. So that was a good call.
Right. Well, ironically, that was Fed speak, right? Those 2 days.
Yeah. Yeah, but that's like, what do they call the miniest of black swan? Well, we knew the Fed was coming out, and it's like, the Fed said what he was going to say, and still everybody said, we're going to sell off, which is such a joke to me in every way, shape, and form. But it happens almost every time, and then we recovered because it was a nothing burger because we were expecting it. So what about the Qs? I mean, what are we talking about in the Qs right now, especially with last week's little Amazon and everything else that was releasing?
Same story here. I mean, the big
Yeah.
names are still supporting this market. It's a very narrow market, meaning it's just a few names that are supporting this move. But when you have weighted indexes, this is what happens. You can have many stocks. In fact, a majority of the stocks going a different direction. But if you have your heavyweights that are moving either up or down, they're going to drive those indexes. And this is the same story. Back up above that 10-day moving average. There was no bearish trigger here. We're going through earnings. Anything could happen. You just got to be on your toes if you're a long investor. And we really look at this as a way to, if you're long only, then you go to cash. And the old adage is, if you go to cash, when do you get back in? Well, as a trader, that's very easy. And it's just the reverse of how I show going short or selling. Okay. Draw a line in the sand, use a moving average, whatever, and you'll be okay. So, Brandon, let's take a look at the IWM. This is the Russell 2000, and it's down over 1% today. But what's interesting is this one has triggered, and this one is trading lower. This is really kind of interest rate driven, and as you can see here, as I zoom in, we do have some significant bearish candles here, and this would be kind of a confirmation that if we break down below that 190 level, we could easily see 180 really quick on the Russell. So those are the three broader markets.
Interesting to see this chart, Jeff. Just hold up a second, because this is way different than what we're seeing on the Qs and the SPY, and this is kind of more of the small caps, right? This is where they're headed. And the way that you draw that, 180 looks to be in play right here. We're going to wait for confirmation past 187, wait for confirmation, then maybe put on a short.
Right, that's right. And you can, I've kind of anticipated this last week. I anticipated the move and, went ahead and put on a trade that did target that 180 level. And so far it's working out. But if you're more conservative and you want to wait for the market to tell you, well, for the IWM and for the Russell, for the small caps, it's told you, it says, hey, right now bears are in control and we're looking at headed down. Let me give you a quick target on this before we move on. I will, let's see here. Let's do, sorry, wrong tool. My bad. Oops. Let me just take that off here real quick. Hit that one and then that one and then this and remove all. Okay, here we go. And then let's do, I rearranged my, all my, my little widgets here. So bear with me here. So here we go. So, all right. So
this is Fibonacci, right? Is that what you're throwing on there? Is that what that is?
Using some Fibonacci extensions here. And you can see here that the 100% extension is down here at 182.50. I think that is going to be a good range to target between that 180 and 182 half. Especially if we pierce this previous low here. If we pierce this previous low, then that's where we're going. So anyway, just a little Fibonacci work on the Russell to kind of give us a target and see where this thing is going.
Well, you're moving on along here. I mean, if we're looking at oil, gold, and silver, absolutely boring to me right now, right? Completely dead, in my opinion. But oil seems to be making a move, right? What's happening here?
Well, although the statements of the Occidental Petroleum CEO were long term, going out to 2025, we do have a total reversal of fortune here for USO, which is our loose proxy for WTI, which is West Texas Intermediate or crude oil in general. Okay, and look at this. We're right back to major support here, right at the thick of pricing, trading at $67, $68. So interesting that we just kind of rallied up to take out um, you know, whatever it was doing is now past and gone, and we drop below that 10-period moving average, and we're looking at dropping. Now, what's interesting is that prices at the pump have not been reflecting this. I've been watching pretty closely, and they are actually up about 7 cents across the board. So interesting dynamic that we have dropping crude oil prices, but sticky prices at the pump because production is taking on a little different, is pricing in something different for crude oil. Now, interestingly enough, you mentioned gold, and it's really Fed speak and the reaction of the U.S. dollar that has sent gold and silver quickly reversing. Gold caught a bid last week. It rallied out of our wedge here. We got a confirmation to go long, and then all of a sudden, the Federal Reserve speaks. The dollar starts to move, and gold drops. Okay, gold's down 58 basis points today. Silver down even more. Silver is real, same kind of action. We had this nice little rally going. Looks like we might get a little momentum there, but nope. Testing now major support for silver. And if we drop below this $20, right now, 2050, which it's below that right now, we could see reaching these lows again, which are 19 and a quarter. I think we need to be very careful if if you want to be long silver. It's just trading in this big range, and now it's breaking below major support and possibly heading lower. So if you are looking to pick up gold or silver, I think you're in a good place to wait just a little bit, and you'll get some discounted prices on these two metals.
Yeah, that's interesting. I just don't fall. Gold and silver they just don't excite me a whole lot lately. But I mean, maybe that's moving into a range where it might be tradable here soon. What else are you looking at? What other markets are on the rise here?
Well, we need to look at interest rates, of course.
One of your favorite ones, obviously, with what happened last week. Obviously, we've got to check on interest rates here.
Right. So, let's start with on the long end of the curve with TLT here. Again, we had a bit of a rally. Rates were dropping. The Federal Reserve comes out, starts talking. We have now a reaction not only to Fed speak, but to the ICM number. That's the manufacturing number. And boy, interest rates start spiking. And that's what you're seeing here with a drop in the bonds. Okay. Means interest rates are going up. This is the long end of the curve. But what's really interesting, we're going to go to SHY, which is the short end of the curve. And boy, are those rates really popping. Okay. On the short end of the curve, if we got this nice long rally that brought down interest rates on the short end of the curve. And what that was doing was flattening the inverted yield curve. Well, that trend is over. I've got a chart for you here of the 2 and 10s, the inverted yield curve, which I talk about from time to time. We got close to normalizing, but look at this. We got really as close as about 35 basis points. Now we're all the way back down to 68 basis point spread between the short end and the long end, meaning short-term interest rates are really starting to spike. This is not good for the market. Okay, again, this inverted yield curve, which has been going on since October of 2022, okay, is just really forecasting tough sledding ahead, because usually it's about anywhere from 6 to 18 months out, and we are about 18 months out now. I think we're a little beyond that, and we're just kind of keeping our eye out. Like I said, technicals are keeping us long the market, but we're kind of ready for a pullback or some tough sledding ahead. And the advantage of being a trader rather than an investor is that we can react, and we are prepared to do that, really going the opposite direction if we need to. But this inverted yield curve is something to be, keep your eye on, because the bond market, it foreshadows a lot. And right now it's foreshadowing a recession ahead, which, Brandon, last week we had Gundlach on, and he's a famous short seller. And boy, he was 100% confident that we're going to get a recession here later this year. So we'll keep an eye on it.
What I hate that. I hate when people talk about that. I mean, everybody's been calling for a recession for 18 years, or whatever it is, and it's like, yeah, I can predict it's going to happen. I can predict it's going to rain too. It's going to rain eventually, and then I'll be right that day. But I don't know. I don't like all the naysayers.
They have a great track record, and he's got a pretty solid track record. That's when you kind of start listening a little bit.
Whatever. In the meantime, we've watched the Dow skyrocket 8,000 points. So good for you, buddy. You've predicted something. Anyway, that's just the way I feel. I know we went over earnings just a little bit ago. A lot of earnings coming out, but what are you looking for to trade this week? Where's your trade at?
Well, there's so much to trade, and that's exactly what we do in our publication that focuses on earnings, and specifically on stocks that are going to break out or that we anticipate going to break out. You can find that over at ewotrading.com. But looking ahead this week, I'm really, as I go through that list that we had up a little while ago. And you just saw it on the screen. Sorry, I forgot to example. I have a free ebook, so to speak, that talks about how I trade earnings events, really from a direction of non-directional. Okay, and that's available at ewotrader.com/straddle. And it's a free guide on how we trade earnings utilizing two different strategies, and that's for you to kind of pick up. But this is what I'm about to show you. This is one of the strategies I'm about to show you. And so this week I focused on Gilead Sciences. Through all these names that we have, and all these big names, Under Armour and Disney, and just the list is endless almost. How do we pick one? Well, they meet certain criteria for us, okay? And Gilead is one of those that tends to pop around earnings, whenever it has earnings. And so I've got this, what I call a baby strangle on, and baby for me means just a couple of strikes wide. You buy a call at one strike, and then you buy a put at another strike, and you anticipate a move either way. The pricing for this is just indicating something that I don't really think is going to happen. Sometimes it does, and that means the stock not move very much. That's what the market is pricing right now. But history tells us something different, that Gilead does move. So this is the trade that we'll be watching this week. And, it's a reasonably priced trade. It's not expensive. I think here I did a couple of contracts on this, but that would be our trade for the week. Yeah, it's about $275 per strangle at the strikes that we're using. So inexpensive trade, and looking for big returns. Again, we don't anticipate triple digits every week or every time we trade one of these, but I do look for doubles, okay, or as far as double digit return. So be totally happy with a 20, 30, 40% return off of a 2-day trade.
Yeah, I think that's nothing to shirk at there, Jeff. Not bad at all. And that trade looks really good. And we'll be watching to see how that one turns out over the next week. But Jeff, I mean, you've been crushing it lately with all your trades. And you mentioned that guy that you talked about here a second ago. If you haven't downloaded Jeff's guide, go ahead and download that thing. It talks about everything that he trades, how he trades, the things that he walks through here. These are good trader tips that Jeff's come up with, and this guide is easily downloadable over at evotrader.com/straddle. So go ahead and go over there and get that thing. Jeff, as always, thank you so much for dropping by the channel today to discuss what's going on in the market, your trades. As always, you've been crushing it. If you've been following Jeff, you've been doing really well. If you haven't, then sorry you missed out. But don't miss out anymore. So keep following his trades here. He's doing really well. You guys have been awesome. Go ahead and subscribe, like the video, and we'll see you next week back here on the channel.
Take care.